June 18, 2021. You're watching me, Nikki Yu, also known as Business Trader for the Awesome 10X Free Friday class. So the topic, should we sell stocks into new highs, all-time highs, Nasdaq 14.2, S&P 4,200 above, your Dow Jones at 35,000? Are we in the greatest speculative bubble of all time? So there are news, or rather commentaries, by some important market players. Market narratives have pushed aside fundamentals. Logic and math once made up the basic laws of investing, now no more.
Recording in progress.
It's about supply, it's about demand, it's about what the narrative wants. Filmmakers use the phrase narrative is everything to emphasize the importance of storytelling to their craft. They understand how a good storyline communicates to their viewer, draws them in, makes them root for the protagonist, and without a good narrative, even the best cast will inhabit the most wonderful characters, risk failing to entertain. Great narratives can terrify you, warm your heart, or compel your attention. And these days, narratives are getting sky high valuations, whether warranted or just not. Let's take a look at some narratives in the markets today. The Bitcoin narrative, fiat has been debased by government bailouts, central bank largesse, other ill-advised interventions. This will eventually lead to a massive shift to digital currency by Bitcoin. How about meme stocks? The collective power of the internet can stick it to the man. Reddit Wall Street Bets can identify heavily shorted stocks. As a group, let's just buy out of the money call options, forcing a massive short squeeze, power to the people. The idea of meme stocks as a narrative led me, this is actually written by Barrett Holds, reach out to Yale University professor Robert Schiller to ask whether, is everything just a narrative today? He's also the author of Narrative Economics, How Stories Go Viral Driving Major Economic Events. A story becomes new on everyone's lips, not because it is true, but because its contagion rate has gone up or recovery rate has gone down. Just as viruses can see surprising new spreads because of the subtle mutation, contagion rates of stories are affected by such things as superficial resemblance to recent events, celebrity connections, and even sometimes by their outrageous, daring falsehoods. Hence, the inherent power of storytelling is only part of the picture. Much of their narrative's influence comes from plot line virality. A good story might persuade you, but a great one can be viral. Bitcoin became a $1 trillion asset, not due to the strength of the story behind it, the genesis myth of Satoshi, technology application of blockchain, the inherent scarcity of mine coins, and the post-financial crisis interventions by government worldwide, and how that narrative resonates with so many differing people. So these narrative fallacies present an obvious risk for investors. When we believe a story that turns out to be not true, we can end up holding assets worth far less than the story suggested. This is especially true in the market's daily price action, which can be noisy and irrational. Schiller adds, I've been saying the efficient markets theory is just half true. Viral narratives can be the initial drivers of higher valuations, but those companies must eventually deliver revenue growth and earnings. To update, the father of value investing, Benjamin Graham, once said, in the short run, the market is just a narrative machine. In the long run, it is a narrative debunking machine. So let's take a look at the markets today. Should we sell the Nasdaq? We're in a place where people are saying that we are in the greatest speculative story or the greatest speculative bubble of all time. Your Nasdaq is now 14,200. Indeed, that's already more than double. So I'd argue that this could be higher highs. It could continue higher, but caution. You don't want to be aggressive. That's what I'm trying to do in Awesome 10X portfolios. In my own Awesome 10X portfolio, that's what I'm doing. I'm also telling people who will listen that they have to be cautious, even if the charts are actually hitting all-time highs, like NVIDIA. For instance, very strong. I like the company, no problems with it. But I generally want to be taking profits when the markets are hot, even if I like the companies involved. Meme stocks, crypto, S&P 500 are in a bubble. The charts are showing overbought levels, some of them. Your index is overbought. We can contract 5 to 10%. I'm not trying to predict, but I just want to be prepared. Recently, there was a Fed meeting this week, and you see that the dollar pushed up to the highest the dollar pushed up very high, and commodities fell the biggest in the last 15 months. So gold, silver, copper, palladium, everything. I'm going to show to you the charts of commodities later on. This is your dollar bullish fund. Could see that from about 24 to 24.74, that's the dollar index. You could see that most everything pegged to the dollar actually suffered, most especially your commodities. In fact, when people were asked, what is the most crowded trade? In June, people were saying, they think it was the long commodities. Long Bitcoin was number 2, long tech stocks, long ESG, environment, social governance, shorting treasuries, going long euro, and the others. So you could see that people were thinking that the commodities were overstretched. It was the one contributing to inflation, commodities. And so far, take a look. Standard deviation from historical trend, global asset classes, standard deviation from historical trend. These are the most overbought commodities, the British pound, communication services, US equity, material sector, basic materials. So in other words, these are all the contributors to inflation. The global equities was still above the trends in terms of deviation, but it's not above your IT or your technology stocks. Could see energy financials are here, healthcare, consumer discretionary. So the market is not yet so overbought when it comes to consumer discretionary or retail spending or reopening related names. Now, in terms of EM equity, you're here. Consumer staples is here. EM equity is somewhere here. Real estate is here. Asia Pacific, Japan is nowhere in the overbought zone. And the ones that people don't ever buy are utilities, or UK equities, UK bonds, and the dollar. People shunned the dollar for so long, and it seems as if right now, they're coming back to the dollar. We see the movements all across the board. This is a snapshot of what happened in your commodities. Oil fell, gold fell. It's now actually below $1,800. Silver fell from about 28 to about 26. Your copper, which was near 5, is now near 4. Platinum, huge drop. Palladium, huge drop. We can see more convincingly the charts later on if you wish. Palladium, sugar, cotton, cocoa, wheat, aluminum, nickel. With a lot of these entities going down, what happened? Steel fell. You could see that after a strong run up from about $7, $8 to 28, or 400% rise in just less than a year. That's August till today. Looks like we topped. X goes down, FCX goes down, HL goes down. Perhaps expect all commodities goes down. Just like that, the Fed cured inflation. Freeport-McMoRan, copper and gold. Take note what happened from about 45, 42. It fell straight to about 35, or a 20% slide in just 2 to 3 days. That's how fierce with very strong volume. Seems that we've seen a short-term top or long-term top for some of these miners. Copper is on track for the biggest weekly drop in the last 15 months. 3-month copper is down again, pushing its losses for the week at the biggest for 15 months. Record steel, there's not much room for rising anymore, said a Singapore-based futures trader with 5 years experience in the market of iron ore. China started credit tightening, signaling that commodity prices should fall, declining to be named because of company policy. China's steel mill continues to break records. Production is hitting an all-time high, reaching 473 million tons year over year. That's well on its way to surpass last year's mark of 1 billion tons. Authorities have vowed to be in a high water mark as China is seeking to curb emissions from this highly pollutive sector. That's left supply struggling to catch up with demand. The structural problems affecting iron ore supplies in China remain prominent, and who asked not to be named discussing his company's positions. So I know there are many bulls. Actually, PTJ, Paul Tudor Jones, is a commodity bull. Prior to the Fed event, he even said, isn't it obvious? We are in a huge shortage. We are in a huge shortage of these commodities. And with so much demand from reopening, from so much infrastructure bill, from this electrification world, well, he didn't say that, but that's where all these are going into. He even said things are batshit crazy right now. That's Paul Tudor Jones who said that. And he said, wait until Reddit crowd realizes the shortage demand versus the actual demand, the shortage of supply versus the actual demand, which means that he's a bull. Well, I'd say that in the last 2 days, seems like the market doesn't agree with him. This is what the markets agree upon. Yes, for if you're looking in the year, performance of the year, the entire commodities have been strong up. Year to date, strong one, yes. But in a single week, see those drops. And in a single month, see those drops. It means that it's in the end, the beginning of the end. So you've got almost all commodities actually falling down on just a Fed statement remark. Take a look at all the charts. These are all your basic material charts. BHP, Vale, double tops. Rio Tinto drops. ECL drops. NEM, a gold company, drops. SHW drops. So it seems as if the metals and mining sector at the very moment is in a bearish market. Gold drops. I remember steel, Nucor drops. So these are peaked. These have peaked. 50 to 110, 40 to 65. Gold is falling. Barrick Gold, that's Barrick Gold. You can see all the charts are the same. ArcelorMittal falling down, POSCO Steel falling down. You might say, but wouldn't it be bought at some point because there's real demand? I'd say yes, but maybe wait at about 200-day moving average or even lower than 200-day moving average. We'll wait. But at the moment, in about next 2 months, expect these to still continue dropping. So I'd argue, yes, a continuous drop on these copper mines, gold mines, and so forth. Now, these are also adding to the pressure. Asia to Europe shipping fees are actually sky high. From less than $2,000 to more than $12,000, or a 5x increase in just less than a year. This is June 2020 and this is June 2021. A 5x increase, of course, contributes to inflation. So the shipping fees are very expensive. Importing, exporting are taking a toll on most of the people who are doing this type of business. These are contributing to higher prices because if it's tough to transport, those prices will contribute to inflation. So one thing to stem inflation is, of course, to see that all these commodities go down. These are the weekly drops, soybean, lumber. Take note though, unless you didn't know, lumber was up 375% year over year. So although these have dropped over the last week, it's still very much in the high-end zone that can continue to fall further. This is not yet the end, but actually just the beginning of the end. Let's see about some people. They're saying in the Doomberg, well, that's his own Substack, many small and mid-sized shippers are throwing up their hands. The cost of shipping is surpassing the margins of the products that they're just trying to move. Shipping costs are at all-time highs, coming at 5x, sometimes 10x the historical norms. So that's how hard-pressed all of your mid-sized shippers are doing right now. Things are getting out of control. These have to be eventually stopped. Now, what is something that has been out of control? The printing of dollars. This is the Fed's balance sheet. versus bank deposits, bank loans, millions of dollars month end. This is the narrative of Bitcoin, right? The Fed balance sheet has gone up $8 trillion and so forth. This is year 2007 and this is 2021. And this is 8 trillion, this is 18 trillion. When are we going to stop? Since financial crisis, it seems as if this is a bubble that will never end. And when you take a look at, this is actually a chart from Lynn Alden, take note. She noticed that as of June 15, 2021, a day before the Fed, most of the most overbought are actually commodities. The violet line here is Bitcoin. The orange line, 30% is Invesco DB commodity. Then the S&P 500, MSCI emerging markets ETF, and then gold, and then treasury bonds. So you could see that in terms of what to deflate, it would have to be Bitcoin and commodities to basically stem inflation. China today recently ordered state firms to limit all their overseas commodities markets to control the soaring prices of raw materials. So you are seeing technicals, fundamentals, even political are all saying stop and end commodity boom cycle. Some commodities have now wiped out all of their 2021 rally in just 2 days. For all the talk of a commodities boom, they've actually wiped out all their gains for a year. Several more are close to doing so. Soybeans have erased their entire 2021 advance, sliding more than 20% from an 8-year high reached in May. Corn and wheat also tumbling, grains sliding the most since 2009. Some markets have recovered losses, but the ones surging, nickel, sugar, and lumber, have all faltered, same as for platinum. So it only tells you, yes, start of the end, or the beginning of the end. The fact that some markets are falling while others, including crude oil and tin, are still holding gains underscores how unevenly complex the world is recovering and reopening and expanding once again. Those materials may have climbed on strong demand fundamentals, but others face their own unique headwinds, such as an easing supply worry in soybeans, a monetary policy uncertainty in the case of gold and silver. Some materials took a hit this week on the Federal Reserve's signal for interest rate increases as early as 2023. A rising dollar, China's efforts to slow inflation. The Asian country has said they will release their metals from state reserves in a timely manner to push prices back to the normal range, ramping up efforts to cool the surge in commodities. Risk off is front and center thanks to the hawkish words from the Fed. Even some of the markets are clearly benefiting from the reopening are actually seeing a pullback. As I said, sometimes, base metals like copper are actually going up because of actual demand, copper and steel because of real housing demand. However, it's possible as well that, or even your agricultural products, because people want to eat again, you've got more agricultural product needed. Nonetheless, you're seeing that it's volatile. So volatility, in my view here, is actually favoring the bears, and your rallies are getting sold. And I'd say that the trend for commodities is more slumps rather than rallies. Now, this is also important. Possibilities. I saw this, and if you don't ask, the possibilities are just none. But if you do ask, the possibilities are many. If you ask me, are the markets going to go all-time high? Or the markets continue to crash? What's going to happen to markets? To be honest, the markets have infinite possibilities. Yes, all of the scenarios are possible, but let me tell you what I'm seeing. There are going to be many scenarios for your future. It is possible that even if the Nasdaq falls or doesn't fall, in fact, last night it never fell, even if the Fed raises rates, even if the dollar goes up, even if commodities crash, it's actually possible for many companies to continue going higher that are not Nasdaq. Let's take a look. Did you notice recently a lot of solar names went up? Solar stocks have been rising these past few days. Maction Solar is a solar panel. I'm going to share to you more. Solar companies have been rising. Sunrun has been rising very sharply from about 44 to 52. Could it rally to about 56 and 62? The answer is yes. Seems as if even if you're scared of the market in general, Nasdaq, the Dow Jones, there are sectors that actually bottomed. They crashed first. Take note, Sunrun fell 62% from its peak. Even if it just goes to mean reversion, it's possible it rises to 56 or $60. So it seems as if any dips of Sunrun will have a buyer, especially 45 below. Now, what about SunPower? What happened recently? Despite the Fed raising rates, the dollar going up, what happened? The money flowed into solars. Notice SunPower rallied from about 24 to as high as 26.72. Maction, which is doing the solar panels for SunPower, is also up. After a huge drop from 57, consolidating here about 15, right now at 1850, if you're going to ask my opinion, this is going to go 24 rather than going down to 15. So for solar, what are we going to say about this? Also trending up. Trending up from 68 to 78. How about CSIQ? Also upwards. 34 to 39, still possibly going to go 43 and 50. How about Enphase? Still strong. In fact, the strongest move, rallying as high as 162. How about Solar Edge? Also rallying from 240 to 260. In general, the solars are benefiting no matter what the Fed said. Now, let's understand as well more names. Are all the SPACs falling? No. Let me share to you a few things happening in the SPAC field. Oops, sorry. Let me share that again. Some news for you. Semaphore, aka CM Life, appoints Andrew Kasarkis, a health data expert and precision medicine scientist, as the chief data officer. Semaphore, a patient-centered health intelligence company leveraging AI machine learning, derives data-driven insights, announces the appointment of Andrew Kasarkis, Doctor, PhD, to the newly established role of chief data officer. He brings more than 20 years of leadership with a focus on digital analytics, genomics, AI for life sciences. He will be responsible for establishing additional structures, processes to further optimize the company's health intelligence platform, orchestrating data use and data science to support research, development, and innovation. You'd say that this belongs to any genomic ETF, any healthcare fund perhaps, or any fund that invests in disruptive innovation, especially in the life science field. You have to also know a few things. He also served as the EVP and the Chief Data Officer at the Mount Sinai Health System. Dr. Kasarkis will help us optimize our data strategy and drive continued innovations for health intelligence platforms, said Eric Schatt, PhD founder and Chief Executive Officer at Semaphore. Deep experience in technology, keen experience in genomics will help us build predictive disease models that will improve health outcomes. While at Mount Sinai, he also served as a professor in the Department of Genetics, Genomic Sciences, Policy at Icahn School of Medicine. Prior to this, he was also co-director with Dr. Schatt, helping build the Icahn Institute for Data Science and Genomic Technology. Computational biotechnology, biology, breakthrough technologies, data science have the capacity to revolutionize healthcare. I'm very excited to join Semaphore. I think I read somewhere that he's also he used to also be one of the team members of PacBio, which is also an important company. Disclosure, he is the Icahn School of Medicine is an equity owner in Semaphore. In addition to their roles with Semaphore, Dr. Schatt remains affiliated with ISMMS, faculty member, and Dr. Kasarkis is a professional lecturer. They've both published more than 90 research papers, and prior to joining Mount Sinai, Dr. Kasarkis had leadership positions at PacBio, Sage Bionetworks, and Merck. Dr. Kasarkis is a PhD in molecular and cellular biology from UC Berkeley, as well as a BS in biology, BA in chem from University of Kentucky. How does the market like innovation and disruption? And any company that invests in healthcare, because we know that Biden's initiatives are very strong in solar and cancer research, healthcare. CM Life Sciences, bullseye. Was it affected? Affected in a bullish manner. Bullish. If you're bullish on Biden initiatives, it means that whatever the Fed said about raising rates, hiking rates, didn't affect the long-term reasons of investing in these names. In fact, any drops was bought. $12 CM Life was bought last night at 13. I won't be surprised if this goes as high as 17 or 21. Any dips are being bought for CM Life, aka Semaphore. How about in their farming? Now, we like SV. SV is Aero Farms. We also bought the warrants. I remember telling you guys in the classes or even in free updates sometimes. I talked about Aero Farms. Yes, let me read an article about them. Aero Farms is positioned to be a potential industry leader, access to considerable amounts of cheaper capital from the public markets. Indeed, it did a SPAC. So additionally, industry consolidation will begin over the next few years. Aero Farms has both highly liquid public stock as well as cash to buy acquisition targets. Given that other vertical farming companies will need to respond to this advantage, I expect that most will likely pursue the public listing route. It means that this won't be the last. There actually are 3 so far. You've got Aero Farms, Agrify, Not Harvest. We like all of them. It's possibly going to have more. The big question now is not whether the Aero Farms deal will herald a new era for public listings for indoor farming, which is all but certain to happen, but rather, are we entering a period of public market activity for the broad ag tech and food tech sector? According to Ag Funder, a global investment in ag tech and food tech, this reached an all-time high of $15.8 billion in 2020. Yes, when it comes to ag tech and food tech, we're talking about the likes of plant-based, like Beyond Meat. Impossible Foods IPO is not yet there, but we never know, maybe in the future. You've got a lot of ag tech companies such as Just Eat, a CNBC disruptor. Just Egg, sorry, not Just Eat, which is doing cell-based meat. I think that you got Mitzi right now, a meat tech printing company, Mitzi 3D, Meat Tech 3D. There are going to be more agriculture technology firms such as Bowery Farms, Plenty, Freight Farms, Gotham Greens. They're all in the private eye today, but it isn't true that the market doesn't see that there is a compelling reason to invest in food waste mitigation, ag biotech, alternative proteins in their farming, robotics, and automation companies, all for driving innovation through the food and agriculture value chain. So expect more commercial revenue, develop sustainable business models, providing a realistic path to profitability. And with so much interest in ESG funds in private and public over the last couple of years, it's reasonable to ask whether it will follow similar to the EV sector or the mobility sector, which had its best year ever with even more than 15 publicly listed 2020. I even have to count all of those EVs that listed. Too Simple, Rivian, Arrival, Fisker, Hillian, Proterra, Xpeng, Neo, Li Auto. There's a lot. I may not be able to name drop everything, but when we're talking about the EV sector in terms of funding, more than 100 SPACs, all listed, all got funded. That's $100 billion and more. Whether it be battery suppliers, actual electric vehicles, prototypes, those with real clients, and so forth. Now, in terms of indoor farming, another good news, App Harvest just completed a deal with Rabo Agri-Finance. You could remember that App Harvest listed through a SPAC called Novus Capital. They had a good earnings quarter, by the way, and so far they're actually getting better news. It's a company that is delivering fresh fruits and vegetables more sustainably, 90% less water, only using rainwater and open field agriculture. They've completed a deal with Rabo Agri-Finance. This is a subsidiary of Rabobank. They secured $75 million to rapidly grow their network of CEA facilities in Central Appalachia, controlled environment agriculture. Using this $75 million, the anticipated fixed rate is just 4 to 5% on 10-year amortization of debt over 20 years, with a 60% loan-to-value mortgage in Moorhead, Kentucky, which began its very first shipment of produce just January of this year. The first farm is already producing more than 40 million pounds of tomatoes, serving top grocery store chains and food service outlets such as Kroger and Wendy's. AppHarvest announced a development plan for 12 high-tech farms by the end of 2025. Company expects to expand production to include leafy greens and strawberries next year. Higher yields, yes. And the market is showing significant interest in the AppHarvest business model, driven by all these ESG funds, building a climate-resilient food system and more predictable yield and quality. This credit facility will represent a new milestone in terms of funding, demonstrating that we are capable of securing attractive, non-dilutive financing for the network of 12 high-tech indoor farms that we are working to develop by the end of 2025, said AppHarvest founder and CEO Jonathan Webb. AppHarvest reported its first quarter performance on May, announcing a guidance that was in line, and the company remained on track for its guidance for the next 2 years, with high-tech farms under construction designed to grow leafy greens in Berea, Kentucky, and then in Richmond, Kentucky. And as announced, 2 more projects are already beginning to be constructed this year. Our top priorities are optimizing our financial targets, capital structure, building a high-tech sustainable food company with the highest ESG principles. As one of the largest agricultural lenders in the US, we see partnering with AppHarvest as a natural fit to help fund their farms of the future, said the head of Rural North America for Rabo Agri-Finance. We believe the AppHarvest model shows great promise to create a climate-resilient food system, addressing environmental challenges, etc. So this is good. This is AppHarvest, and we like the company, and we would love to buy that. We would love to own more. We want every AppHarvest tomato they can grow, said Mastronardi Produce President and CEO Paul Mastronardi. We've got high demand for US-grown pesticide-free produce already, and when you combine that with the taste, color, and freshness of the AppHarvest model, on top of their social mission, it's driving our customers to just ask for more. I like to invest in companies that have a big demand. AppHarvest, Danimer Scientific, these are interesting. Food tech, biodegradable plastics. That category, whether you're investing in Danimer or the upcoming Origin Materials, which is going to change name this month, AACQ, or you have the likes of Pure Cycle Technologies, I'd say that people are very much open to really invest and consciously put their capital in companies that they can see themselves owning because they're really solving an actual problem. In this case, food security, because we have less farm and yet more people in the next 30 years. 0% harsh chemical pesticides, 100% delicious tomatoes by AppHarvest. So it's a frequently purchased good. You're always eating your tomatoes. Food safety means securing healthy food for the future. Now, in case you don't know him, this is David Lee. He was the CFO of Impossible Foods and also a president of AppHarvest. He's going to be talking about connecting global food leaders to map out the future of protein. AppHarvest is working to create an economic and agricultural renaissance in the heart of Appalachia, building large-scale climate-controlled farms that gets 30 times the yield of traditional agriculture, using less water, 90% less, only recycled rainwater, no harsh pesticides, zero agricultural runoff, while providing nutritious, delicious fruits and vegetables. It's an interesting talk. I'd love to listen. Futurefoodtechprotein.com. So these were their sales. Still slow. 4 million pounds of tomatoes. That's about $2.3 million of sales in the first quarter. 4.5 million gross loss driven by the launch of their commercial sales training and new labor force. But overall, they've got a lot of cash. They have $300 million of cash as of the end of Q1. So I also want to talk about companies that are also very much in the agricultural tech platform. In case you have not been aware, Pintuotuo connects more than 12 million farmers in China to sell their produce, whether that's coffee or yam or whatever produce, basically. Mostly in the rural provinces of Yunnan. And I'm aware still that there's a China and US rift. Either way, Pintuotuo at 123 to 2125 right now is a company that I love to invest as well. July, they'll have their food security forum. They are a wonderful company, and they're giving livelihoods to a lot of people, not just farmers, and the consumers win. In fact, I think this is the model that US is trying to copy. US e-commerce is copying Pintuotuo. It's very successful, in case you're not aware. Pintuotuo is just less than 5 years old, or sorry, was it 5 or was it 7 years old? I'd have to recheck my analysis. Oh wait, why don't I just go there straight? It's a 5-year-old hectocorn. Yeah. Pintuotuo. In case you're not aware what is a hectocorn, it's better than a decacorn. A decacorn is just 10x. A hectocorn is 100x. Wait, no. 50. Oh, wait. Forgot. Hectocorn. Hectocorn is a company that's well above $100 billion. Okay, there you go. So you have a unicorn, a decacorn, and a hectocorn. So a 100x company, 100 corns, hectocorn. Why do I love Pintuotuo? A few reasons why. Of course, I'm very impressed with how fast they grew and how fast they're continuing to grow. Not just what they've accomplished, but what they are continuing to accomplish. They're actually they're very good because the AI Tuoto farms are empowering rural poverty to basically sell better. Through the AI, they can forecast how many products of that should be done. And Pintuotuo does microfinancing to these farmers. It is the largest agricultural platform in China. So the sales, this is very important, the comparison of supply chains. Pintuotuo is 10 times better than traditional e-commerce and offline retail. So the manufacturer, logistics is also Pintuotuo, and then they go straight to the consumer. In fact, from the manufacturer side, like the farmers, they also are financing them. So everyone wins. The farmer wins, the consumer wins, and Pintuotuo wins. In that case, of course, you can go to the Awesome 10X to go to the deep dive of that. But the answer is yes, I'm a buyer of Pintuotuo here at these levels at 123 or 125. There's a question, BSN. However, I don't know what BSN is. Twilio and Square are going up. And it just tells you that the growth stocks are expensive, but are continuing to be expensive. So where are those bears who said that inflation has run amok, growth stocks should fall? Well, I think because inflation is getting controlled, people are now saying that, well, growth stocks have to be back, which is why Nasdaq went up last night. When there's no inflation, people love to buy growth stocks. eVTOL. eVTOL as a sector I like, but if I haven't studied it, I can't really answer the question. So yeah. In terms of companies, I'd have to say that the Chinese stocks are alive. Even the lethargic ones. JD, I like the company. Here at about 71. You see the first uptick last night at $73. with value and growth here at this Chinese company, I'd say, it's an answer to buy. Yeah, okay. Let me answer this question. What do you think about BSN? They've got a contract with American Airlines, 250 eVTOLs. So I can't answer something just because of a news bit. However, right now, all of the SPACs in the eVTOL region, I'd say, are in the $10. So buying the SPAC stock is not the right way. If you are bullish, you have to check the BSN warrants. So in terms of attacking SPACs, do not buy any of the stock SPAC. You have to be buying the warrants. What is the warrant of Broadstone acquisition? Okay, here. It already went up from about 60 cents, it rallied to $1.50. You can see that high volume. So there's a lot of people who bought it, most likely here. The news was probably here June 9. Broadstone acquisition. Let's answer the question. Okay. News. Broadstone receives notice. Okay. So this was Vertical Aerospace. Yeah. I've heard about this. Okay. So it's gonna be the same with. It's a competition. The eVTOL is a competitive space. You've got you've got celebrity backing here. You've got American Airlines, Virgin Atlantic. They're asking for up to $4 billion of orders. So they're trying to say that their pipe is good enough. They've got backgrounds from Rolls-Royce, Airbus, Jaguar Land. I think what's happening in the eVTOL space is similar to what happened with the EV space. So the pro forma is about $2 billion. People find it attractive versus Joby Aviation versus Kel. Joby is listed at 6.6. Lilium is getting listed at 3.3. So this is about 2.2. And if you take a look at the other eVTOLs that are listed already, such as EXPC, aka Blade. Blade Air also went up, right? So from about $7 to $11. ACIC, Archer Aviation, it did fall a bit, but it's actually in the uptrend. So in my view, in general, eVTOLs as a sector is in an uptrend. Of course, you know about my bullishness on EHang as well. Yes, we've been pitching buys 21, now at 39. I think it's still going to go 50 above. So any dips are still getting bought. So just to continue my topic, Chinese stocks I'm seeing already are bottoming out. You could see that last night, Pinduoduo is the strongest among three of them. Pinduoduo, highest growth, still the smallest amongst the three. So in terms of upside, that's where the best pick would be. Nonetheless, it doesn't mean that JD and Baba will not be bought. So I think that you want to be buying JD, 69.73. The target would be about 87 if you're really long-term. Long-term meaning hold it a year. In a short term, in a year, then it's 87. If you're really, really long-term, of course, there's no selling. It's going to go all-time highs, right? So I do believe JD is going to hit all-time highs above 100 plus. Give it time. So this is a really great investment in my view. JD, Alibaba too. At these levels, after a 35% drop, here about 210, 211, while there might be resistances here at 220, I do think that at 211, people are trying to bottom fish this already. More SPACs to discuss. This week, we saw GSAH buying a radiation detection company, Mirion Technologies, for $2.6 billion. Company's EBITDA is approximately about $192 million, so that's 13 times. This transaction has BlackRock, Fidelity, Janus Henderson. You've got the people, including applications in nuclear power, healthcare, homeland security, and military. The former CEO of Paul Corp and IDEX Corp, Larry Kingsley, will become chairman. If you're going to ask me about GISA, I know nothing about it. But you're just seeing recently that the SPACs that have a merger, because GISA was reported before to be eToro, but of course it didn't become that because FCTV was the eToro, or GISA was being talked about as a cryptocurrency SPAC, which never materialized. At least now you know that it's actually in the biotech sector. So it's in the biotech sector. Did the market love it? I think that it comes at an opportune time because right now biotech is getting a lot of funding. You are seeing that the warrants are getting bought, especially here about 168 to about $190. So you're seeing that spike in volume after the announcement of what GISA is. The SPACs today are getting bought if people know what they're buying, not just because, oh, it is Bill Ackman that they'll buy it. No, because they don't want surprises. In fact, Bill Ackman's SPAC is actually getting sold down. You can see that when they learned that Pershing Square was only just universal, people were actually not that happy. There was a big gap down from 26 all the way to 22. And even today, even if it's rising, I'd argue there is a strong resistance here at 25. So right now, SPACs are in a mixed territory. People could buy you if you're in the indoor farming SPAC. Like I said, SV warrant, take note what happened. SV warrants have been rising for over 40% already. So we were making a right call to buy at about 95 cents. Right now it's 140. So we're seeing indoor farming in general as a SPAC is getting love. Leafy greens, tomatoes are generally getting bought. Now, there was a question a while ago, what do you think about Twilio, Square? They are classic growth stocks, classic Cathy Wood type of names. Yes, they're the leaders, just like Zoom Video. And what you're noticing actually right now is that even prior to the Fed meeting, the market was already very bullish and buying growth stocks. It's bottomed here around May, and we argued yes when we were seeing the charts. People are asking, have the growth stocks bottomed? And we said yes. And more forcefully, the growth stocks aren't just bottoming, but are trending massively on the upside. Could this be a V-shaped recovery all the way to 600? Well, I'm not sure about that. It tells you that I'm balanced. When people ask me, should I sell my position? I'm telling them, as long as it's actually on the upside, you just trail. Meaning for Zoom Video, as long as it's trading above 345, I will not sell until the market tells me so. Zoom Video can go for 100, can go for 50, can go for 75. And the fact that Zoom Video is going up like that tells me, last night, every growth stock that I follow was hitting all-time highs. Growth stock, Shopify. Well, not all-time high yet, but nearing all-time highs. Back to the February highs, right? NVIDIA, all-time highs, $750, $755. These are all-time highs. Semiconductors, AMD, breaking out with the Xilinx merger. Twilio, going if there was this downtrend line, looks like tonight's going to be breaking into the uptrend line and no more downturn. That was just consolidation. No more pullbacks. That was the pullback only at $280, which you could argue is not really a huge drop. That's just profit taking. CrowdStrike, very strong, right? Is Crowd going to 10, to 10? If it does, I'll buy. It never fell. Market's just keeping going up. Twilio, the Trade Desk, one of the most expensive names. It's consolidating, not yet going up, but I don't think that you can get $350 anytime soon with how the markets are doing right now. So the question about should I sell, in a way, the question is, how big of a position do you have in the markets? Because while it's valid to be a little bit thinking that there are stretched valuations, I'd argue Square is stretched valuations, right? Could it rally to 280? Probably. Seems that the market at $200 felt that was the low. We don't see any drop. Is PayPal going to continue higher? Even at stretched valuations, it seems as the answer is yes. If you're just going to be valuing companies on a spreadsheet model, you're going to be dumbfounded with this market because it's not just about valuations. There are names that are expensive that will continue to remain expensive and continue to be so expensive. And I'd rather buy companies that I find have pulled back substantially that are actually growing wild. So for instance, the reason why I talked about App Harvest is because It pulled back already from $40 all the way to 11. Even on this drop from 20 to 15, this is a comfortable area for me to be buying. So I like growth stocks, but I'm choosing my positions on names that haven't gone up. So example, this is a growth stock. When you study DOU, it still fell from about $20 to about $8. These are where I'm seeing tremendous value and growth. So I'm trying to do both value and growth in this market scenario. TPGY shows to me value and growth as well. It's a SPAC company that failed to not really a failure, but there was some accounting that they have to finish, and they're gonna delay from July to about September or end of September. Either way, because it's just at $12, my downside is probably just 10. I studied already TBGY, which is EV Box. You can see it was a free class actually. As long as the upside is actually more than 60%, I can tolerate any downside of 10 to 20%. And that's what I'm seeing here. You cannot just make your decision because the Nasdaq is nearing 15,000. Actually, it's not nearing. It's at 14,200. Your S&P, your Dow Jones, that cannot be the basis of your decision making. Your decision making has to be the company itself. Another growth stock. What happened? Unity Software growing stronger, breaking out, not just growing, but breaking out. You see, it can go 111, can even go 130. It actually makes me wonder if people sold Roblox because of a decline in user growth, and yet they're willing to buy companies that are also trading at 30 times price to sales. Could it be that they're not really that serious about valuation? They're just sometimes going to sell it down only to buy it back. I'm of the view that the market is giving mixed signals. It's not giving you just growth. In fact, they're just buying growth stocks. They're buying growth stocks all the way. Palantir being bought up. Unity and Palantir, I like them. And the thing about me is that I like them even when they were down, more so when they were down. Actually, we're telling people to buy more. When you're actually thinking not about what the Fed thinks or what Wall Street thinks, I think you're in a better job, because whether Palantir drops to 24 or 22, at the end of the day, you know it's going to go 30 and 35 next year and next year. So I think that is a better, a healthier stance in the markets. Vuzi at 16 or 14 is a good buy, but it's not like my top buy, because at the end of the day, I'm not quite sure how high wearables can go for Vuzi with a lot of threats from Apple's and Google's, because Vuzi will fight eventually with Apple glasses and Google glasses. Vuzi has a head start, that's all. And these are the kinds of things that are happening in the markets. The markets are so frothy that it's actually enabling all the innovation to get funded, which is a good thing, by the way, because I do like all these innovation and disruptive companies to get massive funding. Relativity Space just recently raised $650 million, led by Fidelity, joined by investors BlackRock and Tiger Global, as the company is stepping up work on a fully reusable rocket that will attempt to challenge Elon Musk's SpaceX in less than 3 years. We've signed up to create a lot of value, certainly remaining the second most highly valued space company in the world, Relative CEO Tim Ellis told CNBC. The planned Terran-R rocket will carry 20 times as much orbit as Terran 1, the latter of which the company is on track to launch for the first time by the end of this year. We are at the cusp of super duper fund flows into space and innovation, genomics, cancer research, a lot of AI companies. We're actually in a sweet spot where funding has never been that hard. The SPACs can get the money that they want. Take note, Virgin Galactic, no revenues, but they did have successful missions. Very strong movement, 60% up. Now your other space-related names like Boeing, Lockheed Martin, Maxar Technologies also going up, recovering. So it tells you that Indeed, when I told you last week to add biotech and space and SPAC warrants in your portfolio, I wasn't wrong. I was correct. Um, Nasdaq congratulating Relativity Space, $4.2 billion valuation. This is just a Series E funding. So this is the Relativity Space. It's 99% 3D printed. That said, 3D printing, for instance, even the 3D printing stocks are also going up. Nano Dimension is now back to $8. So a few more. There are more SPACs coming in. Wise, a British fintech firm, said that it's going to go public on London Stock Exchange with direct listing. Wise, which is formerly known as TransferWise, said that they're now going direct because they know they don't need fresh capital. They've got the funds. They don't need to allow issuance of new shares. Their existing shareholders will just sell it directly from the market. Wise said it already has 10 million customers using their money transfer service with about $7 billion or $84 billion every month. These are competing with Western Union and MoneyGram, just like Revolut and WorldRemit, another upstart. News of Wise debut is making a big win for Britain, which is hoping to convince large tech firms to list in London rather than New York. So what are you seeing here? The market loves technology, growth stocks, innovation, space, indoor farming, solars, cancer research. So you're seeing pockets of bullish avenue that it doesn't make sense for you to be in cash, no matter what other people say. CM Life, take note the EBITDA versus the rest. This is the other peers of CM Life. It's actually trading at about 12 times, 10 times, 21 times. This is Garden Health, Exact Sciences, Invitae, Natera. And look at the valuations of CM Life, still at about 4 times, 5 times. So it doesn't, you shouldn't wonder why people are actually flocking into many SPACs. As long as they can see it's very transparent, high growth, and cheaper values. Revenue by segment, you could see that about 38% CAGR for the next 3 years. And they've got all these segments for Sama Life. Oncology, pharma partnerships, secondary data insights, health systems. Semaphore is making significant investments in R&D, developing existing offerings in addition to creating the Traversa platform. Their growing oncology franchise is expected to reflect 27% in 2023 from the 3% today. Women's health in genomic testing solutions, also growing. Pharma strategic partnerships, driven by large-size partnerships and growing. Advent Health and Semaphore launched a data-driven precision medicine program optimizing patient care and outcomes. This is one SPAC that is actually valuable, while other senior growth cap stocks like Facebook, Amazon, all your Nasdaq are overbought. These, however, are oversold. So I think that instead of owning senior growth stocks, the FANGs, I think you get the younger FANGs, the FANGs to be. The next FANGs are in the SPACs. That's why I think it should be in the SPACs, like CM Life. This is CM Life Sciences. If you're wondering how the warrants are doing, so far from $3 to as high as $5, I won't be surprised it goes to $7. So any dips at $4 or $4.40 is going to be bought here, I think. The business is just growing and getting better. Take a look. The volumes are increasing even on higher levels because people believe this June, they're still buying. There's no bear in June. There's more bulls in June. Still bullish. Invitae, still bullish. It's more expensive than CM Life. But notice, after a drop from 60 all the way to 25, people are beginning to buy all their genomic companies. And as for Chinese names, Baidu is getting their self-driving cars rolling in China. They want it to be profitable because the self-driving unit of Baidu is not yet profitable. After a 50% decline, I'm of the view that yes, 175 is a bottom, and it might be slow, but you're seeing actually the consolidation of a big drop as a bottoming out, a bargain hunting phase. We're still in the bargain hunting zone for these Chinese companies. Some more news ideas. Bitfarms is listing from OTC to Nasdaq this Monday. So at $4 and 4.30 with upcoming listing and with Bitcoin projected to be an ownership of 75% of millennials and Gen Zs for the next 20 years. A Bitcoin farm like Bitfarms, the largest in Canada, is likely to be an asset that will have more winners, given that they can mine at least 8 BTCs a day. That's about times 300. That's about that times 360. That's close to about 3,000 Bitcoins in a year. 2,500 Bitcoins a year. And they're holding that. And their cost is like $8,400, not $40,000. Imagine the margins. You could grow your money because the business is growing and they're expanding all those data mining centers. So I think that you've got many, like Genesis Digital Assets just ordered 10,000 new Bitcoin mining rigs from Canaan. So business-wise, it's getting better and better. The drop is just, in my view, an opportunity. Even if $4 drops about $3 or $2.50, I think that's a buying opportunity. SEC delayed the ruling on Bitcoin ETF in a blow to crypto traders. Yes, it's volatile. They're saying that they need better clarity on rules. They need to have more oversight. But that delay is going to be fixed, in my view, over time. So you have to understand Interactive Brokers accepting potential Bitcoin ETFs, another approval, Morgan Stanley, Goldman Sachs, all the institutions trading, buying and selling Bitcoin. There are people who will always have value. And because of that value, if you just check where are the values for the BTCs, I'd say that it's in the miners, the Bitcoin miners. Bitcoin dollar is right now still in a consolidation. So at $37,000, it might just stay there. Just a 50% drop. I would have thought it goes $22,000. Anyway, if it breaks 32,000, it could go 22,000. So the story is still left to tell, left to be told. We still don't know. For now, you could see so many down arrows. So this is still in a range trading market. Now, the original holders are, of course, Charlie Munger and Warren Buffett. This, of course, is sarcasm because you know how much they hate cryptocurrencies. Yeah. But they are the original hodlers. It's just that they hodl different assets. Mostly, they hodl the Disneys, Coca-Cola's, Apples. We're also seeing with the meme stocks and the SPACs, some of them are the most shorted blank check companies. You saw Clover Health go up, go down. Some people are shorting Playboy, shorting, which I think is valid. Shorting Madrid Capital. We got a short report on DraftKings. We got a short, I'm not sure if TSTH had a short report. But I think that with SPACs and memes and warrants, prepare yourself for volatility. A short report can happen 10% down, like what DraftKings happened, but people bought it anyway. Nonetheless, if DraftKings ever rally to $55, there is perhaps a seller. So Playboy rallies are now going to get sold. And some SPACs, in my view, are going to get sold. So in a realm of overbought markets, expect volatility. I like Hot 8 mining. I talked about Bitfarms only because of the upcoming listing this Monday. So in terms of listing, do be aware that American Battery Metals and Alpine are going to get listed as well from OTC to Nasdaq, which is really providing a catalyst for those names. So that's it. I hope you learned something. The title should be Sell Stocks into New and All-Time Highs. I hope my charts tell you that the answer is not as easy as it seems. Just because the index is overbought doesn't mean that you have to sell. I want you to be balanced. You have to understand that the narrative stocks are going to be traded. Meme stocks have to be traded. They are not to be hodled. If you're trading warrants, call options, be fast in them. Expect volatility, expect shorts, short squeezes, everything. Clover Health, take note, that was short squeeze, right? From about $6 to 28, then falling down. I think that goes down. AMC tonight, it's gonna be, if you're gonna ask me, I think that there's a lot of resistances here. But then again, the Reddit crowd is so strong. I'm not short, by the way. I just think that the people who sold at $60 are valid in selling. It's okay for me to sell early rather than to feel sorry. Actually, it's not feel sorry because you're happy anyway. You're up like 500%. It's more like there are some times when I'd rather have a book gain rather than getting more. So, yeah. That's it. Hope that you learned something. With so much overbought stocks in the market and extended overstretched valuations for growth stocks, while it's going up, I have a trail stop. Don't assume that things can go up, up, up all the way. We are in overbought territory. V-shaped moves last May to June can lend to some pullbacks now and then. So just prepare some cash. How much cash? It could be 25% cash just for volatility. That's it. Thank you very much. Bye-bye.